Welcome to the Global Hydrogen Interview Series, which we also call Full Court Press. And we're going to take a rapid fire into a market that some are calling the new oil of the 21st century. My name is Michelle Meinecke. I'm the director of the Energy Transition Dialogues, and I'm delighted to welcome Manuel Cohen. He is the head of new energy for the Middle East and Africa at Siemens. Manuel, thank you very much for joining us.
Thank you for having me.
That is a very interesting job title. I would love to see your day to day. It must be very diverse.
It is diverse indeed, and it has been busy in the last 2 years, but we're working on a good course, so it's easy to spend hours on it, yeah.
And I mean, talking about busy, you're joining us at a time as the world's biggest climate-related gathering is heading into play, or is in play now, and that's very busy with COP26 doing everything it needs to be doing in Glasgow and hopefully reaching some big decisions then. It's an interesting time as well because we're seeing the recently released World Energy Outlook. I mean, on top of the IPCC, on top of the IEA, we've had major landmark reports this year screaming at us with some key messages. And that the latest one is showing that the new energy economy is emerging, which I think you'll agree with, but it's not quick enough yet to reach that net zero by 2050. Again, I'm sure you'll agree. So on one hand, we have soaring renewable energy deployments, and on the other, we have the world's consumption of coal is rising, and we have carbon emissions at their second largest annual increase in history. Now, obviously, this interview is going to be about hydrogen, but just before we dive into that, I think with the timeliness of COP, I'm keen to get your opinion on what you think could be made in terms of progress over the next 2 weeks that would have the greatest positive impact on energy markets decarbonisation. What would you hope comes out? Would it be better structure for clean tech innovation funds? Would it be more holistic global architecture for carbon pricing? What's on your wish list?
On my wish list is actually to talk more about carbon and leave the hydrogen at the side for the moment, because I believe clarity on how we handle carbon, how we classify carbon, how we tax it, and how we price it will enable a lot of business cases also for the hydrogen economy. So for me, that the carbon handling is an issue that needs to be addressed prior to that. And you said it in your question. I sometimes have the feeling we are 20 years late, and now we're trying to make it up now. And we definitely have to change the trajectory in order to achieve something in time, if it's still time at all. If you look at IPCC, I found the results pretty alarming, and I'm a bit irritated that there was not enough, from my perspective, not enough public buzz about what the IPCC report actually said. So I really hope that COP will be used in order to spur this public discussion again, and make sure that we all know where the priorities are.
And it's, in terms of timing, I think I agree with you about the public buzz. If for someone who's read anybody who's read that report front to back, there's a lot of concern in there. There often are in these. Like I say, we had it with the IEA, we had it with the IPCC, with different messages, but along the same tone of time is running out, tick tock, tick tock. But the latest report, the World Energy Outlook, is a real wake up call. The red flashing light for humanity, the red flag for humanity. And I agree with you on the public buzz side of things. How confident are you that report will find its time, or have its moment, as it were, at COP in terms of the findings there? Do you think that will be the right platform to really leverage those messages?
I think it is the right platform, because we have, if you go to the street and ask people what the COP is, I mean, do this 5 years ago and people would shake their heads, and now the world knows. So I think we have achieved a great deal of awareness. Now we have to achieve a great deal of action in the right fields, and there we need to talk about coal, we need to talk about carbon, and then ultimately we have to talk about hydrogen. But I'm more worried about the first two.
Indeed, and I think as well, COP historically has been seen. I'm sure those sweating brains and blood during the COP don't agree with the statement, but it has been seen as a much broader political gathering, and we'll do brushstrokes here, and we'll get a general idea. In the last couple of years, that momentum and that push has really been to find tangible solutions at COP. And that's why I think that this report will have much more energy in it at COP than perhaps it would have done 3-5 years ago. It wouldn't have had that public momentum asking those questions behind it as well. So in theory, it's always the best platform, but I think this year is truly going to hopefully lead to much firmer responses. I mean, you're saying there about carbon. Obviously, we've got a lot more carbon pricing initiatives in play now. We've got 64 now, according to the World Bank, versus 2 in 1990. So things are certainly moving on. We've had record high prices on cap and trade systems last year with the EU ETS, of course. Do you think things are moving in the right direction for there to be a big decision or a big leap made during COP? And what would you like that big leap to look like?
So from my perspective, looking again into the hydrogen economy, we all know more or less in which direction we want to go. But no matter which country we talk, which use case we talk, which industry we are in, we will always calculate a business case that has a gap at the end. Yeah, this is inevitable. We need to find ways to allow bankable projects in the hydrogen space. Now, the way how we run the economy today and the way how we are not pricing the carbon in the right way, the carbon emissions, it does not allow us to close this gap. So we will always argue about how to close the last bit of gap in our business case for green alternatives.
That 20 to 30% on a global basis.
Probably, yeah. And now if I manage to get this question out of the system, we will really reach the tipping point where green projects and decarbonization initiatives become bankable, because money is available in the market. It's not banks, investors, investment funds. The money is there, but still there are rules how you deploy this money. And today we struggle with giving clear answers to investors why these projects are viable, and that has to be fixed. And either I convince the off-taker or ultimately every one of us as a consumer to pay a significantly higher price on the green solution while another one is available, which is cheaper for you and me, or you basically offset it by taxing or pricing the carbon correctly. And we have to go the one or the other way. At the end, our ticket from Abu Dhabi to London will have to cost 20-30% more, the one or the other way. So this has to happen in order to decarbonize aviation, for example. This will happen, and the question is only how do we structure it in the market in a fair way, so that every market participant takes an equal risk or an equal hit on his pocket.
And that is a huge question in country and then cross border as well. When we start talking about developed and developing nations, which we probably need to leave for a whole nother set for the interview. I think it's pertinent, can't avoid it, but it's so deeply complex. I just want to touch on what you were saying there about the investability side. And we recently saw the launch of the inaugural Hydrogen Investability Index. It was released by Cranwell Partners and Energy Estate. And in that index, 4 countries from the Middle East feature in the top 30 ranking, and 3 nations from Africa are in there as well. And that index is aiming to do exactly what you just said is so very needed. Is trying to lift the veil. It's trying to give investors that level of visibility. We've got about $500 billion in the pipeline for the whole value chain of hydrogen through to 2030, according to the Hydrogen Council. And $500 billion is a good chunk of change, and finding the right framework and to invest it with confidence will certainly see that figure rising as well. How do you see these sorts of index like the one by Cranwell Partners and Energy Estate? How do you see index like this or indices like this helping MEA's plans to accelerate their hydrogen development? Do you think that it's very, very useful for the investor community? And do you think that it'll encourage those nations that don't have hydrogen roadmaps already to build one?
I do think it's helpful. At the end, we will always look at project basis and make projects bankable. And then I'm back to where I was before, that there is an economic gap that needs to be addressed. But still, in order to make projects viable, it's not only about the economics on the offtake side, it's also about the regulatory environment, because you need to de-risk the project over a lifetime. And then the regulatory environment you're in, the infrastructure that you're in, the overall business environment, if from a certain country, for example, like in the UAE where I'm sitting, that there are excellent relationships to the established off-takers all over the world, because there is an economy here that's used to trading liquids. Yeah, we are just talking now about a different quality attribute on the same kind of product. Yeah, it's nothing completely new except for the source of where my liquid comes from, yeah, or my fuel comes from. All the rest is already there, and this of course helps investors to de-risk the project massively, because we can be assured that once I get my green fuel or my hydrogen produced, I know what to do afterwards with that.
Indeed, it's building that visible picture as well. And just looking at the CCUS side of things, we've got 90 gigawatts of electrolyzer deployment expected by 2030. Of course, vast majority of hydrogen today comes from fossil fuels. And just keen to see from your point of view, do you see the CCUS market developing at a pace fast enough to make blue hydrogen more scalable and feasible? Some say by the mid-20s, but I think that's too soon. You'll tell me if I'm wrong in a second. But by the 2030s, do you see that market gaining pace like it needs to? We hear a lot about CCS and CCUS, but when you actually look at the numbers and number of projects that are actually out there, it's a different picture.
Yeah, I agree, and I think we have to get out of the either or discussion with carbon capture or green hydrogen, blue or green, and whatever the color is. Yeah, we have a bigger problem to solve. I'm very much in the pragmatic camp here. I know there are people who have different opinions about it, and where say you have to do it right from day onwards and spur the right technologies and so on. Also valid arguments. But if you look at the total amount of carbon that we need to get out of the system, from my perspective, whatever helps is valid. Now, to some degree, I believe the green hydrogen and also the blue hydrogen story, or the story about carbon capture, they are also in a similar technology degree, because we have not seen so many CCUS projects established to date. As a matter of fact, they are quite limited ones. And there is also a big debate about what is the technical readiness and efficiency, and how much carbon do you really get out of the system long term, yeah, if there's leaking later on and so on and so forth. So these kind of information, no matter if you talk about carbon capture or if you talk about electrolyzers, these questions we will only answer if we have projects in the field and gain operational knowledge by running systems. And this is for me something that is oftentimes neglected a bit. If I want to scale up into the 100 megawatt gigawatt class, I want to do this after I tried it out in a size that I can handle, and where mistakes that will necessarily have to happen, because this is how you learn, are happening in a scale where also you can still afford them to happen. So we need to talk more about sequencing the right steps, independent of whether we talk now blue or green or hydrogen or carbon capture. We need to get all these projects going, but sometimes I fear that we are exaggerating a bit now on what we believe we can achieve in a very short period in time.
Yes.
And my worry is that once we realize it is not that easy, then we will also have other people standing up saying, I told you so. And now it's all wrong. And now we have to go a totally different way. So my worry is that we will choke in the system, yeah? That we will start running too fast, and then we get out of breath. And I think what we are doing here is a marathon and not a sprint. So from my perspective, we really need to talk more about setting up roadmaps, doing the right steps in the right time, and then being really rigid in implementing these roadmaps and the milestones, so that we don't use it as an excuse to just push, let's say, painful decisions forward and say, yeah, I can only do it in 8 years. Yeah, and it will always be in 8 years. This cannot be the answer. But the question is, what do we have to do in 3 years from now and make sure that this really happens?
Indeed. And for 2022, what would you see as low-hanging fruits that can be made in terms of progress? What progress can be made in 2022 to really start driving this market forward? Like you say, whether it's blue or green, right now that's not the point, but just driving a clean hydrogen market forward, because we're looking ahead to 2030s, and like I said, I think when estimates are made for mid 2020s, they're far too soon in terms of the what needs to be done. But we're still talking a decade ahead, 9 years ahead, and so on. And there's many stepping stones to get there. So what can we make? What progress should be made in your view in 2022 to really help the energy market get on track with supporting clean hydrogen?
So a lot of people in the market, for example, are waiting for the delegated act on the EU RED II. It is important because it most likely and hopefully this will finally give a certain degree of assurance on how we have to assess, for example, certain carbon sources and how we handle the carbon and what kind of renewable sources are allowed and available and how I can account for that. And why do I believe that these regulatory aspects are so important is because I try to set up business cases with our customers that need to prevail for 10, 15, 20 years. So I want to go together with our customer to their bank and say, look, this is the technology, it's proven, we can assure that runs for so and so many years, and we know how it behaves over time. But at the same time, we have to discuss about the regulatory environment. So for example, if I do a synthetic fuel and I have a carbon source involved, I have to say that's what my carbon source is. And I'm confident that this carbon source is going to be accepted by the regulator and, by the way, the public opinion over the next 10, 15 years. So now, if you think about the dynamic of the discussion we are in the last 18 months or 3 years, so we have such a dynamic discussion, but I need to make a decision now and give people the assurance that whatever I do now is going to be okay for the next 10 to 20 years. So that's a big stretch. And the sooner we get a bit more clarity on some of the aspects, like what kind of renewable sources are accounted, how do I assess a carbon source as avoidable, unavoidable, acceptable, not acceptable, this will actually help us to bring projects forwards. And also, if I do more on the carbon regulation, it will also open up the solution space for different kind of projects, because currently the industry is neglecting a bit the carbon-based molecules because we have too many regulatory risks there. So that's why in the hydrogen space, everybody's looking more into green and blue ammonia for today, because I have less regulatory risks there. Yeah. But at the end, I could open up the solution space by bringing more potential projects on the table if I could venture into carbon-based molecules, but it's a risky game today, and that's why most people are actually deprioritizing it.
And especially in a post-COVID or indeed in a mid-COVID economic environment, the IMF said last year that we had the worst economic squeeze for nearly a century since the 1930s, and then we've obviously got all the impact of the workforce changes. We've got the impact of the lockdowns, we've got supply chains. It goes on, and the economies are certainly doing well to bounce back. Many are anyway, but there's still that hangover of edginess. We don't want to completely dive in, because who knows if the pandemic gets worse next year and we've just committed X, Y, Z, and it feeds into it. How much do you think that is still, how strong do you think that feeling of hangover still is for investors when it comes to hydrogen?
I'm not sure, because at the other side, I see so many investors and project developers in the market who are eager to go fast, because there's also a race to position yourself and to make sure that the places in the value chain are distributed to your favor. So I see a lot of dynamic in the market, which is a good thing, because it keeps people running. There are a lot of carrots out there, and now we have to see how we stabilize the picture in order to also get a bit of transaction cost out of the system. Today everybody is talking literally to everybody, because you don't know which entity is playing which role in this new economy that is about to come. And that is not the same as you would experience it in a more established industry, where you more or less know who has which role. So I get the question pretty often. I mean, the typical question is, you in Siemens Energy, what is actually your business model going forward in 10 years? So every customer discussion we have that, because it's obvious, because everybody is challenged to ask himself, do I actually run the same business model for the next 10 years? And I don't think that most of the entities have actually very, very good and especially firm answers today, because we don't know. So there are a lot of balls in the air. which is a good thing. It's good for creative thinkers. It's not good for getting transaction cost out of the system and be fast in implementing projects, because you just have to figure out a lot of loose ends before you can actually go for something.
Indeed, those with creative spirit are certainly doing very well right now. Just before we have to wrap up, unfortunately, I just want to ask you about the electrolyzer side of things. So every 4 to 5 years, the output of electrolyzers increases tenfold. If you really think about that statement, is incredible, even if it is from a low base at some point. And Siemens Energy, the latest PEM electrolysis product line, proton exchange membrane, is heading into the higher 3-digit megawatt range. So the idea being that you can produce several tons of green hydrogen per hour. Can you give us a little bit more of an update on this?
Mm-hmm. So what's happening is that over the last 15 years, we basically managed to scale up our electrolyzer capacity in one product by factor 10 every 5 years. So this more or less worked, because that's how the PEM technology basically made the way out of the lab into the field. Now, and this was happening by increasing the cell sizes. Yeah, the larger the cell, the more throughput I get, and the larger the output. Now we have to talk about how to set up plants, because it's not anymore one product that you deploy. You will deploy 6, 8, 10, 50, 20 in one bigger plant, where then the aspect of plant integration, optimization of the auxiliary systems also gets a bit more weight. And at the same time, the development of especially the PEM, of the electrolyzer technology in general, but especially the PEM, also didn't finish it. I think it's merely about to start. So there are so many directions where we have to go. We have to increase the cell sizes even more. We have to increase the pressure levels, because that allows us to get, again, system complexity out. And then we have to increase or improve the way how we integrate the PEM into an overall plant that can deal with the intermittent renewable supply on the one side, and that also supply an as constant as possible stream of hydrogen into whatever comes downstream, because most of the use cases you have after the electrolyzer, they don't really like intermittency. So you have the challenge that you count seconds in where your power supply is, but you count hours on the other side, and we have to manage this in between. So from my perspective, the one question is, how do we get the cost from the electrolyzer out? And everybody who's in the business is really trying to do this. And I'm confident that the industry will manage this. And that by the end of the decade, we will really see this cost out.
Well, the question I was going to add is when, and you say by the end of the decade, we'll start to see that.
In big times, yeah. So I think we are in the PEM development. We're at the beginning of the learning curve. And wherever you look into which report, people always predict 30–50% cost out. I really believe this is possible, but it's not all of the story. It's also about looking into the larger ecosystem, what is left and right of the electrolyzer. And we need to address these cost out potentials as well. And they are a bit more difficult, because there we are talking about established technologies. Yeah? On the renewables, we have seen so much cost decrease already. There's not much more to come. And everything that happens downstream is technology that's sometimes 100 years old. I mean, if it was so easy to reduce the cost there, we would have done it already. So we have to really look at the full picture here.
And just to really take your title into account as well, to me, that's another conversation. We can have a whole another interview on. There's so much to say, but just to look at the Africa side of it, just briefly before we sign off. Can you give us an overview of what you think from a hydrogen perspective in terms of energy companies? I mean, when we say Africa, I think it's 54 nations on the continent. So these are going to be horribly broad generalizations, but can you give an idea of what of how energy companies on the continent are feeling about clean hydrogen? Are they engaged in the market? We obviously have different areas that are more developed: Morocco, South Africa, and a few others as well. Did you see any emerging players coming through?
There's a lot of uptick in discussion right now, but there are two principal ways of thinking. So the one is the large developer, be it an international or a local one, who wants to reap the renewables in the country and export a green molecule. This you could do anywhere. It doesn't matter if you're in South Africa, Namibia, in Oman or in Morocco. It's always more or less the same setting. Yeah. For me, another interesting case that specifically in Africa will come. There is many countries are actually, they don't have the established industries already. So there is a bit of a greenfield approach that is maybe possible. Plus, in some countries, for example, we import fertilizer for ridiculously high cost because there's no production inside the country. So there is an aspect of decentralization and self-sufficiency that really could help Africa to develop. However, I don't believe it can happen so soon because we need to get the costs out first. Because I cannot ask the African farmer to pay a premium on green fertilizer. It's not on them to carry that burden. It's on us.
Indeed.
So that's why I see this kind of decentralized local offtake scenarios happening after we did the major part of the cost out.
And in terms of countries that have the greatest potential for that, there has to be, there has to obviously be a level of international collaboration. There has to be a level of regional cohesion and so on when it comes to business as well. Do any countries, apart from the usual that we would expect, jump out at you?
I think you still need the combination of the existing industry, the offtake relations, and so on in order to get things going. At least
so the
easier
usual
way.
players.
You need ports to export. So we will also in Africa look where are established players, where is established infrastructure to make it easier and also cut the cost, at least for the beginning.
So for now it's the usual players, but perhaps as well going forward there can be a spillover effect where even if it's on land infrastructure, so you still there isn't enough pennies in the bank to do to build ports and so on, which is obviously another deal completely, but to do on land infrastructure and then be able to have a spillover effect into neighbours who perhaps need more economic support would benefit from it perhaps.
Right.
Yeah.
So maybe my last comment on Africa, we have to consider one more thing, that in many countries, when I really still have a scarcity of electricity in the system, so where people in South Africa are experiencing load shedding today, it will be pretty difficult to explain how I take power, put it in electrolyzers and export it out of the country while we are shutting off the electricity supply. So there are certain things that has to happen at the same time. And this is probably true for many African countries. So we also have to make sure that sustainable and reliable energy is available to the people in the country first before you start exporting.
Indeed. I mean, I used to live in Swaziland or Eswatini now, and I spent a lot of time in South Africa, and power cuts are very regular. It's just part of the course. And like you say, there's a big argument for sorting out your own energy security before trying to support others, even if it is via an export market, which could be profitable and bring in monies elsewhere. Manuel, thank you so much. I feel we've covered quite a few areas. Just to give a quick overview for our listeners, the best way I can describe it is what you said about the risk of running too fast and then we end up choking, that this is a marathon, not a sprint, that we have to take our time, the importance of getting more regulatory certainty in that. To me, the regulatory word is very much like scale, R&S. These two words, they're just so intertwined, and as soon as the regulatory side of things is sorted, the innovation and investment comes, and then we get the scale. But there's still so much needs to be done on that starting point. And saying as well about the need for carbon pricing, and I'm so glad at the beginning when you said, before I go into hydrogen, we need to talk about carbon management and ways to price and maybe even tax carbon, because I completely agree that there's a lot of talk about jumping into hydrogen, and I don't see, you mentioned carrots as well, that there needs to be much stronger financial carrots in place, and maybe a few sticks. Carrots are better, but sticks perhaps we need some. And also talking about CCUS and the need for pilot projects and the reality of looking at what we keep talking about and versus what's on the ground, and that being able to do a lot more trial and error in a safer environment, again helping investors feel more confident in the overall picture. And that overall, you're saying very much that it's much better just to get cracking, whether it's blue or green, let's just get moving. Time's too short. We talked about the World Energy Outlook and the huge alarm bells coming from there. And that, yes, in an ideal world, we'd move forward with green and everything would be great and perfect from the beginning, but we just simply don't have that time, that luxury, or of course, the market structure right now. So I think you've covered so many areas, Manuel. Thank you very much. And I'm sure I've missed a few points out as well. So thank you very much for that. Doing that in 20 minutes is quite a feat. So we appreciate it and we hope you can join us again.
Thank you, Michelle. Have a good day.
Thank you. Bye.
Thanks. Bye.